Welcome everyone. We'll just give people time to get their coffee or tea and get comfortable for what's going to be a fantastic webinar. So just bear with us, get comfortable. Feel free to access the chat and tell us where you're all from. Remember to get the drop-down box of all panellists and attendees. We won't be a moment, just waiting on everyone to join. Welcome. Welcome everyone. We'll start shortly once everybody's comfortable and joined. Hello everybody, welcome to CIPS Auckland branch webinar entitled The Procurement Profession in Economic Cycles and Employment Stability. It's going to be a great webinar today. Thank you for joining us. My name is Sharon Morris and I'm General Manager for CIPS New Zealand and Australia. And I would just like to let everybody know that this webinar is currently being recorded and will be made available to all attendees next week. Allow me to begin by acknowledging the traditional owners of the lands upon we gather today. Tēnā koukou, tēnā koukou, tēnā koukou katoa. And also the lands on which I sit today. I acknowledge the traditional owners of the Wurundjeri Woi Wurrung and Bunurong peoples of the Kulin Nation and pay our respects to their elders past, present and emerging. We're here with over 100 registered attendees today, so I'm really pleased to say that this is our first New Zealand branch hosted webinar, and I'm so glad that you can join us for this special event. Please use the chat box to say hello and tell us where you're from. Make sure you direct it to all panellists and attendees. It's great to have you here today and to learn where you're from. For those of you who don't know us, the Chartered Institute of Procurement and Supply, or CIPS, is your global professional body for procurement and supply professionals. We're dedicated to promoting best practice, in continuous improvement in professional standards, and raising awareness of the contribution that procurement and supply management can make to organisations and the community at large. So welcome again, and without further ado, I'd like to hand over to ADD, the Chair of the Auckland Branch Committee and our host for today. Thanks, Adi.
Thank you, Sharon. As mentioned, my name is Adi Dye and I'm the Auckland Branch Chair. Welcome everyone to our webinar today. It is indeed our first, and I'm thrilled to have over 100 registered people attend. Let's just begin with a few housekeeping notices. All attendees have been muted during this presentation. However, we do ask that you utilize the Q&A chat box to write any comments that you would like to share with the panelists, which will be answered at the end of this presentation. And if you have specific questions you'd like addressed to our panelist members, please enter them in the Q&A box. Now, about today's webinar. The purpose of today's webinar is to bring the subject matter experts, Jeremy Couchman and Wayne Frey, to educate and promote the awareness of economic cycles and the recruitment outlook on the procurement profession as a result of the flow-on effects from the COVID-19 pandemic. I'd like to invite our first panelist to share some insights with you first. However, I'll introduce him. Jeremy Couchman joined KiwiBank in 2015 following 4 years living in London, where he was involved in advertising research for a national news publisher. Prior to London, Jeremy worked for various New Zealand government departments, including the New Zealand Treasury, the Ministry of Social Development, and Statistics New Zealand. At KiwiBank, Jeremy is the guy behind the numbers, responsible for producing economic forecasts and regular commentary on economic matters. Jeremy holds a master's degree in applied economics from Massey University. So without further ado, please welcome our first panelist member for today, Jeremy Couchman.
Thank you, Adi, for the introduction. and thank you for CIPS for giving me the opportunity to present to you guys today. I'm actually looking forward to this. It's been a while since I've done a webinar, so this is a great opportunity. Now, when this blurb was put together for this presentation, there's a mention of business cycles in it, and there's a chart that's come up now with that. And I thought that the business cycle process is actually quite a good way to organise this presentation, given that the key features of a business cycle is quite a good way to signpost a speech. So hopefully today I can start off at a peak, unfortunately take you down to a bit of a recession and a trough, but end on a recovery and on a high. So that's my aim today. So the chart that we have in front of you guys is just a stylized version of what we say the business cycle. And what it represents, just to give you a brief overview, is just the fluctuations of GDP growth or an economy's output around a long-term average economic growth rate. And for New Zealand, that long-term economic growth rate is around 2.5% to 3%. So I wanted to start off at a peak, and then we'll move on through the business cycle. So starting off at the peak, I'm going to take us back a little bit. So back in 2016, New Zealand recorded the last peak of economic growth at around 3.9%. So you can kind of see it was well above sort of the New Zealand average at that time. And that growth rate was largely driven by a little bit by the tail end of the reconstruction going on in Canterbury following the earthquakes. But a big driver, the key thing here, was a big uplift in population growth. And that was driven by a very rapid increase in net migration. So that's the difference between long-term arrivals and long-term departures here to New Zealand. At that peak, we were looking at around 60,000 net long-term arrivals, I'd say, in New Zealand. And that's the size in terms of perspective of sort of a medium-sized town in New Zealand being added to our population each year at that point. So that was a massive increase in population. And when you have that sort of surge, you just have a general increase in demand. You know, people need to eat more, be clothed, be housed, etc. So that was a big impetus behind that. Now, since that 2016, around the end of 2016, we've seen growth actually start to pull back. And that's partly because we're sort of coming towards the end of that peak part of a business cycle. And with such a large increase in people within New Zealand, there was pressure put on our infrastructure. And that infrastructure included roading, housing, schools, hospitals, pretty much anything you name, there was pressure put on. And that sort of reduces the productivity of that. But the other key aspect was also what was happening globally. So we had a new president come in, pretty controversial one, Donald Trump. And Donald Trump is a bit backwards looking. He's very insular. And he likes to pick a fight with those he sees as, I guess, an enemy. And one of those was China, and particularly trade. So there was a trade war that's developed since President Trump has come into office. And that sort of put a bit of a dampener on global trade, and certainly fed through to uncertainty for businesses, even here in New Zealand, even though while we weren't directly impacted by the trade war, it certainly did have some, certainly felt here in some respect. But moving on to the next slide, all of that sort of history that I've just mentioned to you looks like it's happened a long time ago. Because as we move into 2020, the thing that's really dominating, of course, is the coronavirus. It's dominating the news headlines. It's really dominated the lives of everyone, I'm assuming that I'm talking to today. And for economists, it's really dominated the economic landscape, both now and what we think will happen for years to come. Now, we've moved from a peak, as I mentioned, but now we're actually in a recession. So New Zealand is currently experiencing an economic recession. We got GDP data out for the first quarter of this year out last week. And that showed that economic growth actually contracted by 1.6% in the quarter. Now, for someone who doesn't look at this data from day to day, it probably doesn't mean much. But just to put it in perspective, a 1.6% drop was actually the largest quarterly fall recorded in about 30 years. So it was big. And the reason for that was through the first quarter, the very tail end, the last week of March, we started to go into a nationwide lockdown. So that meant things like non-essential services were closed, retail was closed, construction sites were closed. A lot of people had to work from home. And there was a big impact on particularly our tourism sector. So that 1 week certainly had a big impact on growth. But we also had other disruption through that quarter. Namely, we had a closing of our borders. Firstly, we closed travel from China because that's earlier in the quarter, that was the epicenter of the coronavirus. Then we eventually closed the border to all short-term arrivals because of the containment of this. So that has also had a huge impact, as I mentioned, on our tourism sector, which It's important because the tourism sector over the last 5 years has become easily our largest foreign currency earner, producing around $16 to $17 billion of foreign currency each year on the international tourism alone. So that's a big blow to the economy. And while our borders remain closed, that's obviously going to be a drag on the economy for some time. So that's what's happened. And also the bigger fall in GDP growth we saw in the March quarter sort of indicates the carnage that we're likely to see in the June quarter. Now, this is the quarter that we're just about to finish. And this is going to be significantly negative. We think it'll be a record 18% decline in the quarter alone. And that's because of the complete lockdown. So the New Zealand economy was in lockdown for, over that period, I think 3 or 4 weeks. From estimates from the Reserve Bank and the Treasury suggests that wipes basically a third of the economy's potential. Then we moved into level 3, so slightly less restrictive. And that level 3 restriction still saw things like hospitality services closed, that kind of thing. And that was still holding back around a fifth of New Zealand economic activity, the potential there. But fortunately, we've moved quickly to level 2 and to level 1 during this quarter. But nevertheless, overall, we think it's going to be a record decline. But as we've come out, we think that the third quarter will also record a record increase as there's a lot of pent-up demand that's been unleashed that will flow into the third quarter, and we'll see growth around, we're thinking a 16% decline. So that's the sort of dynamic. It's very volatile and it's very fast moving. Now, just moving on to the next slide. In terms of what we think is happening over the next few quarters, we've started to look at this. What does this mean for the economic growth situation over, say, the years ahead? So we've just updated our forecast this week. So we've revised our forecast. The most recent will be June. And we see, in terms of economic activity, we look at annual growth. We think that will likely trough probably towards the end of this year. So fortunately, New Zealand's come out of a lockdown much sooner than many people had anticipated, and this has allowed for a much wider array of economic activity to start to function. So that gives us a bit of confidence that we should start to see the trough in this cycle to actually be reached by the end of this year, and then we'll start to move up into stronger growth as we head into next year. But it's not all plain sailing. Now, when we look at the labour market, what does this mean? Well, clearly for the labour market, a hit to the economy like this is going to be significant. And we already know through anecdotes and data that we've seen a significant increase in the number of people losing jobs, employment declines, and the unemployment rate is, in our view, is likely to peak at around 10% by the end of the year. And that peak, again, would represent something that we haven't seen probably in about 30 years, since the early 1990s. In terms of job losses, this also equates to something like over 100,000 job losses. And in the data we've seen from the Ministry of Social Development, people that are classified as work-ready job seeker allowance recipients, that's actually increased by around 42% since, 42,000 since the end of March, when the lockdown was about to kick off. And that doesn't really capture the whole picture, because just because someone is receiving an unemployment benefit, there are others out there that, even if they do lose jobs, they won't have access to this sort of benefit, particularly if someone has a partner or wife, husband that is also working. They may not have access to those sorts of benefits. So it's probably underreported. Also, we know that the government has put through a wage subsidy, and that wage subsidy is probably holding up things and giving a bit more confidence for now anyway. So what we think for the third quarter, there's a little bit of uncertainty there around this wage subsidy. So that's supporting the government's paid, a few $100s up to so many $100 for people to remain employed for now. But that wage subsidy, while it's been extended through to the third quarter, it's likely to start to roll off then sometime in probably August or September. And that's really what we want to keep an eye on to see what happens. There's likely to be a few, another tranche of job losses at that time, but we just don't know at this stage whether we've recovered enough to reduce that impact. Now, underline our forecast in terms of the trough of growth and a stronger recovery next year. There's a few risks here, and one of those is our forecast. We're assuming here that we don't have another significant increase in the number of cases, particularly community transmitted coronavirus cases. That would be something that would be extremely concerned about. So we've done a great job to get on top of this. We no longer have community transmission in New Zealand at this stage. We do have some cases that have come in from the border, but have been stopped there. And as long as that's the case, that's great news. But for now, as long as we don't have another round of community transmission, then that would lead to things like another lockdown. We think this recovery is quite feasible for New Zealand. The other thing underpinning this is, we have to make an assumption around when do we think borders are going to open up. So at the moment, the tourism sector, as I've mentioned before, is currently, we don't have short-term visitor arrivals coming into New Zealand for tourism. So a lot of those operators, particularly in our tourism hotspots, are suffering at the moment, like Queenstown. So opening those borders does help that industry, but we're not expecting this to happen till around June next year. So it's still quite a lot, and that's because of the nature of the actual coronavirus itself. It spreads very rapidly. It's a very aggressive virus, and we don't have any signs of a vaccine anytime soon. I mean, at the earliest, there are some hints, but this is only hints that maybe there's a virus by the end of this year. But the quickest time to develop a virus prior to COVID was something like 4 years from start to finish. So we've got to bear that in mind, that borders may remain closed for longer, and that would certainly have an impact on the economic outlook at the moment as well. So we've gone from a peak to recession and to a trough. So now we're going to move to our next slide and look at the recovery. So hopefully finish here on a higher note. So in terms of the recovery, we are expected to be stronger than we were thinking, say, during the lockdown. And that's partly because we've been able to open up much sooner than we had previously expected. But also we've seen some of our own KiwiBank data, our card transactions data, which I've got a chart here just showing you. This is spending on KiwiBank customers on their cards at bars and restaurants. This is quite a good chart. I mean, it's probably not surprising when you look at it, but it shows the stark decline in actual spending activity among KiwiBank's customers, at least during the lockdown period. So that was at the end of March and into April. But since that, and as we've moved down alert levels and we've opened up the economy more and more, we've seen a rebound in spending. And it's not just in this category; it's in a lot of other categories, such as spending around hotels and hospitality, things like online spending. While that was high during the lockdown, it was also has remained high since then, which we've been quite encouraged about. But here we've seen, this is an area where you have a lot of social interaction, and we've opened this up, and this may have been an area where people might have been cautious. We've actually seen spending move back towards levels that we saw prior to the crisis, and even actually be higher and remain higher over the last few weeks. So that's certainly encouraging. And that's probably because we've been able to get on top of the virus. It's probably because we have some support structures there around supporting people's incomes through the wage subsidy, etc. So that's certainly helping. So this is giving us a bit of confidence that the recovery will continue. Clearly not until next year. I mean, things will feel dire for a while yet, as we pointed out in the trough chart. But yeah, this is an encouraging sign. Now, the other things that we think will help support the recovery has been what policy has been put in place. So we know from the Reserve Bank, we focus on that quite a lot. The Reserve Bank has already slashed interest rates, so the official cash rate has been cut to only 0.25%. So that's a benchmark short-term interest rate, which does feed into other interest rates. But the Reserve Bank has also started to buy up government bonds. So it started a quantitative easing program. And what this has done is it's allowed benchmark interest rates along what we call the yield curve, such as government bond yield rates of 2, 5, 10-year bonds, to remain low as well. And that should support wholesale interest rates across the curve, lowering funding costs for banks and enable them to pass on lower interest rates. Now, for depositors, that means that it's not as attractive to save. But for people borrowing, in terms of getting mortgages, interest rates have fallen quite substantially, and they're quite likely to go a bit lower as well, as the Reserve Bank is quite aggressive in trying to lower interest rates. So, those have been lowered, and that should help support activity as well for people who may be looking at the housing market now. If they've still got a job, if they've still got a deposit in that, they can get access to quite cheap mortgages. Also, the Reserve Bank has wound back some of its macroprudential policies, such as loan-to-value ratio restrictions. So banks are lending to people with smaller deposits at the moment, and that should also help support the housing market. But the housing market, like the labour market, which are quite closely linked, is likely to see price falls over the second half of this year before a recovery. Now, just to sort of finalise this or finish this off, The recovery itself, and this is probably the area most interesting for you guys in procurement. So the nature of the coronavirus shock itself has been quite sharp, brutal, just very unusual in terms of we've actually had to shut the economy down for a period of time and then reopen it up. And this has led to some interesting trends we've seen that were already in train. This is things around digital consumption, the way we obviously consume, the way we commute, the way we work. These sort of trends have started to accelerate because of this. So during the lockdown, it was difficult to go and go to your shop. You couldn't basically. So there was a lot more spending going on online. And while this was the case that had been happening for many years for a lot of people, for some, they probably weren't used to online spending on a regular basis. So this is a way, if you're doing this for a month, this may have changed behaviors much more rapidly than would have happened otherwise. Also, working from home has become very popular for people, particularly people in offices that are able to. And New Zealand's infrastructure around this actually held up pretty well. So this has been, if you like, a testing ground to see whether more and more people could work from home, even though it was the case beforehand. And it seems to have worked quite well. I mean, my experience, I work from home now more than I did, and that seems to be a trend throughout KiwiBank. And I understand that's the same through a lot of other corporates and other banks and other sort of similar type industries. And so that's really changed the dynamic of how we work. And that's provided some opportunities. So for one, we're not commuting as much, which actually, if we go to the last chart here, on the slide, we can see this is just data collected on traffic count of light vehicles through major centres. Clearly, the lockdown had a massive impact. But as we've come out of the lockdown, in terms of the amount of traffic volumes on the roads, they haven't quite got to places anywhere near we saw pre-COVID. Hamilton might be an exception, but I understand they're a bit of the kind of petrol heads in that part of the country, so maybe that's why it's sort of gone back to normal levels. But larger cities like Auckland and Wellington, and I think Christchurch as well, have seen peak traffic has actually been lower than what it was before the crisis. And this provides an opportunity for things like climate change, for tackling that. If more people choose to work home on a permanent basis, then obviously there's less emissions. It means we have more efficient running of our infrastructure, because we know transport infrastructure has been under a lot of pressure. So these sort of things are some opportunities here through this recovery we might see. The last thing is on businesses themselves. So we saw at the early part of the coronavirus, there was a huge impact because it was centered on China, a huge impact on global supply chains. So modern global supply chains are very fragile. They rely on components being delivered from all around the world just in time. And when these things break down, it can be quite spectacular in terms of how it flowed through. And that was certainly the case for the start of this crisis in China, when even importers here in New Zealand were finding it difficult just to get some stock and to be able to, do what, sell items or actually go and service equipment or whatever they needed to do. It was actually quite tough for them. So that showed a vulnerability, and it may lead to a sort of a trend we've seen around reduction, I guess, globalization in recent years. Partly that's driven by Donald Trump and his anti-globalization push, but also this sort of vulnerability suggests that perhaps it would be of advantage for some, I guess, in the developing world to sort of onshore some of their more sensitive areas of, say, manufacturing or construction, or et cetera, or those sort of components, so that we're able to have more resilient supply chains. So, I mean, there's an opportunity for local businesses if they are producing sort of niche products. They could take an advantage, by investing in certain technologies like additive manufacturing to help with, sort of niche products, which might be cheaper, and also be able to ensure that they can get that supply to those customers within New Zealand. So that's probably a trend we're likely to see as well. So that was the things that I wanted to really discuss. So we started off talking about peak growth that we had a few years ago, moved into a recession, unfortunately, we're experiencing now. We will still feel the impact of this recession for some time, obviously, but we will start to see a recovery as we move into 2021. And hopefully we can keep the borders or new cases from coming into the community reduced to a bare minimum. And that should help New Zealand at least weather the storm for now. So if you've got any questions, please fire them through on the Q&A box. And I'll pass that to Adi. Thank you.
Thank you, Jeremy. It was great, your insights there, obviously showing us how the COVID has impacted the economy in New Zealand, and most parts of the world might be feeling how we're feeling. So thank you for that. We'll now move on to our next panelist member. So we have now Wayne Frey joining us from Hunter Campbell. He will be sharing his learnings as to the market trends and employment opportunities in relation to procurement. So an introduction. Wayne is a senior consultant at Hunter Campbell. He began his recruitment career in 2002, where he specialized in the recruitment for accounting and finance. Wayne moved to Auckland in 2006 along with his family. And in 2010, he joined Michael Page, where he launched and established a procurement and supply chain function in New Zealand. He has since branched out and developed his supply chain expertise and networks in the New Zealand market. Wayne joined Hunter Campbell as a senior consultant and is responsible for end-to-end recruitment services across the supply chain, manufacturing and procurement. So please welcome Wayne Frey. He will now be presenting. Thank you.
Well, thanks for the introduction, AD, and also to CIPS for the opportunity to present. I'll just start off with a few thoughts of how COVID-19 really hit recruitment. I mean, it was kind of a long time coming, but I think when it hit very, very quickly. And really, we'd entered the year pretty much as we entered every other year, which was quite a January with people away on the Christmas holidays. And opportunities had just started to come up. We've seen a lot more activity happening. And then we moved through the gears of levels 4, 3, 2, 1, really quickly. So recruitment hit a brick wall. I mean, it was somewhere in the region of 70 to 75% of the roles that we were recruiting were just paused or put on hold. And that was really around uncertainty. Probably the remaining 25, 30%, half of roles were cancelled and half went ahead. So there was some limited activity during lockdown, but it's safe to say not a lot. So we were really uncertain as to what was happening. Would recruitment pick up quickly? Would it take a while? It's safe to say, it's certainly not fully recovered yet, but thankfully it has recovered probably a little bit better than we were maybe fearing. Now, I know Jeremy covered off the economic side, so I won't dwell on that very well, but what we found in recruitment, there's very much a two-tier economy. So there's those companies that have been badly affected and aren't recruiting, and there's some of those that are actually prospering because of, in part, or maybe in spite of COVID-19. And look, I mean, some obvious examples of those are pharmaceutical distribution services. Whilst insurance has been affected, that we've seen, banking and others in financial services haven't. FMCG and food, apart from some exceptions where they're relying on exports, generally pretty untouched, and we are seeing some good recruitment activity there. Another thing that we weren't sure how much of an impact it would have is redundancies. And I'm not making light of the situation because, obviously it's had a big impact on people and the economy. What we're actually seeing from a procurement perspective, other than isolated incidents of teams in industries that have been badly affected, we're not really seeing many redundancies at all. There's a few in procurement analytical roles or governance roles to a lesser degree as well. But look, the reason behind that, I think, was learnings that a lot of companies had taken from the global financial crisis. One, thankfully, a lot of companies kind of realised procurement was pretty important and it adds a lot of value. The other thing is generally, a lot of companies took the scalpel out and really cut too deep, and given a lot of procurement and supply chain teams, for that matter, run pretty lean anyway, companies seem to be kind of taking stock and not making too many decisions at the minute. Now, we would expect that there's more to come with redundancies, but from a procurement and supply chain only perspective, it's not actually been so bad. Now, if you talk to a couple of my colleagues who recruit more in a transactional space, so with buying roles and purchasing, it certainly had more of an impact there. So moving down to level 2 and obviously subsequently into level 1, we didn't really know what to expect. Now, contracting was badly hit to begin with. I think a lot of companies were looking to retain headcount and reduce costs, and a good way of doing that, or an effective way of doing it at least, is reducing contracting. Contracting now is a good barometer of a recovery. We went through a stage of a few weeks where companies were talking about bringing on contractors. We're now seeing that come to fruition. It's not as it would seem to be as a replacement for permanent recruitment. We're really seeing it is to cover some gaps. Some companies are bringing contractors in fixed term if they're uncertain if they will need somebody long term. But it's really to bring in people. Where we're seeing the biggest demand is people coming to provide audits and look at reviews. So either to refresh, embed, or optimise current procurement, just in time has an impact on that. That's something companies are looking at very, very seriously, and risk mitigation generally is a big area. Pleasingly, we've actually seen permanent roles pick up, which I must admit was a little bit of a surprise. Supply chain's still a little bit sluggish, but procurement has picked up. So we've had a few roles in public sector and healthcare, which is as recession-proof as organisations tend to get. But we're also seeing some in the commercial side, so particularly banking and those kind of areas. Another trend that we're seeing that we probably were expecting is, I think the perception is there's going to be a lot more candidates looking, and it's going to be a lot easier to find people. Now, you can't really forget that procurement is a talent short area, and it's traditionally a really hard space to recruit in. Now, that's been exacerbated by the fact that candidates who were on the market, either actively looking or passively looking, have kind of retreated into the shells a little bit. So they may have been thinking, about the next career step. Now they're thinking about self-preservation, my job's safe. And so a lot of people we're talking to have decided to put things on hold probably for 3 to 6 months. So that does mean when employers are coming to the market looking for people, the perception may be that they think it's going to be very easy to find good candidates, good procurement professionals. The reality is it's probably going to be similar to before. It's all relative. There are less opportunities, but it would seem to be that there's less people looking, and unless they find themselves in a vulnerable situation or perhaps redundant, of course. Other promising signs that we've seen, we haven't really seen any evidence of counter offers at the minute, but we have seen in some instances candidates with multiple offers, which is always a sign of, usually a buoyant economy. I won't go as far as say it's buoyant at the minute, but it's certainly showing good signs of life. In terms of company strategies, looking at either moving away from growth or investments to more of a cost out model, the answer to that is yes and no. I think short term, yes, but companies have kind of learned the lesson a lot. I think when businesses really cut out and looking at upfront cost rather than the complete cost and value chain, and they've seen it, brings, it kind of brings negative consequences. So we're really looking at business looking to minimise costs, but provide optimal efficiencies and service to the business. But what we are seeing is companies looking at how they can get procurement to support the business better. So companies are actually looking to procurement to provide, or at least be part of commercial decision making. And we'd see that, is probably going to continue. I think the challenge at the minute is, cash flows for companies. It is that uncertainty, but short term it's a little bit mixed. Medium to long term, certainly we'd see more investment coming into procurement, which will mean more opportunities, and then we will see that increase in specialisation. I'd expect to see an increase in headcount. Probably not this year. I think the rest of this year is still going to be pretty tough. But probably early to the middle middle of next year, I'd say the recovery is going to be well and truly underway from a recruitment perspective. You know, when companies are looking at a recovery, they're looking to get key people in place to help them recover. So we usually see, although recruitment's usually one of the first things to get hit, it's usually one of the first things to come back as well. I mean, in terms of the skills that companies are looking for, I mean, a lot of it will probably be quite familiar. Good negotiations important, obviously. You know, we are seeing a drop in international travel and domestic travel to a degree as well. So certainly people who can use Zoom and other tools like Microsoft Teams to negotiate, you know, working from home or from the office and build up rapport and relationships with suppliers, I think will come to the fore a little bit more. We're also seeing companies wanting candidates to be adaptable and to agile. I mean, procurement's an ever evolving area anyway. Yeah, it really is, you know, a quickly evolving world at the minute. So, you know, people who can reach out to stakeholders, get a good lay of the land and come up with solutions rather than just being able to follow a good process is very important. You know, dovetailing into that is risk management. Global supply chains obviously suffered enormous strains. You know, factory closures, companies are looking at, should they have manufacturing domestically, should they have domestic suppliers, looking at risk management, the whole just-in-time model. Procurement professionals obviously got a key part to play in those decisions and mitigate that risk in the future. And it's safe to say data analytics is another big area. You know, if it wasn't already doing so, it is going to start driving the majority of procurement decisions, looking at future disruptions, managing risk, assessing, monitoring suppliers. You know, whether businesses bring in specialist analysts as part of a team or in smaller teams, certainly going to be a key part of the procurement manager, procurement category manager's role, but data is becoming increasingly more important. The other two things that companies are going to be looking for is EQ. You know, COVID's created a great deal of stress and uncertainty, and people have been thrown into atypical working environments. So I think all of us, you know, Jacinda Ardern talked about show kindness, but, you know, showing empathy and understanding and the ability to collaborate is becoming particularly valuable. I mean, I don't know how everyone else has got on, you know, but kind of interpreting emotions and body languages through Zoom is quite challenging, I think. So certainly people who can get up to speed with that and obviously face-to-face as well is becoming increasingly important. So that ability to connect with colleagues, stakeholders and suppliers. The other thing, and this is probably the most important one if you're looking for roles, is really being able to demonstrate your achievements. You know, the one thing we get asked most of the time is, you know, did they find the procurement in a better space than when they left it? What cost did they achieve? And so really somebody who can demonstrate whether it's cost out, mitigating risk, you know, championing procurement and improving a business's mindset. Achievement is an absolute key thing that businesses will be looking for. So all in all, it's probably as positive as we could hope it to be. Recruitment activity is definitely subdued, but yeah, it's certainly more positive than we may be expecting, I think it's fair to say. But I think that I mean, certainly, you know, through the Q&A, ask any questions, but you know, I mean, that concludes my presentation. So, you know, thank you guys, and back over to you, AD.
Thank you, Wayne. I really appreciate that insight. It's always good to have a expertise in that field of recruitment, especially with our international audience members in this webinar. This gives you a little bit of an insight outwardly as to how New Zealand's recruitment is going into. So the next piece of this webinar will be to answer some of the questions that you're all probably dying to have answered. So the first question, Jeremy, in your view, is a GST holiday a tool that is realistic, and if yet, will it support the recovery?
So this, Yeah, so interesting question. So this has been, I think, mooted previously, the earlier part of the crisis. In my point of view, I think I wouldn't necessarily support a move to a GST holiday. I think GST itself, the system we have in New Zealand, is very simplistic, and even if you're only temporarily changing it, it still adds a lot of complexity, particularly for businesses to mitigate or to manage around it. Yeah, and I think when you start playing around with taxes like this one, which is integral to the tax system, they sometimes can be quite hard to reverse as well. I mean, you could signpost it and say, look, this is going to be only temporary, but yeah, I think the government's been very cautious not to make structural changes to the tax system right now. I think the better way for the government to support the recovery, and they've sort of been doing this, is really supporting or helping support people's incomes or sort of backstopping that. So they've done that with the wage subsidy. They've also added another payment for people who lose jobs over this period as well, and they've extended the wage subsidy in addition. So I think those sort of policies are probably better at sort of maintaining and supporting the recovery.
Perfect, thank you. Another question for Jeremy. Do you think the drop in traffic movements is linked to a drop in GDP?
Absolutely, they're correlated. So in part because transport itself is a component, it's an industry within GDP, so that is one component. But the other factor is with transport, you know, if you think of all the goods that you buy, even if you buy it online, they will be transported to you somehow. So that, you know, whether that's via air or freight or rail or road or whatever, it still comes through that. So transport itself can be seen as a bellwether or an indicator for GDP activity. And in actual fact, I mean, I don't know why I'm saying this, but ANZ, one of our competitors, they actually produce what it's called the truckometer. So they actually take data like that I showed you, but for heavy traffic around the country, and they compile it to see how it moves with GDP. And there is certainly a clear link there. It doesn't explain all the movement, but it certainly, you know, if someone was interested in tracking that data, it would give you a feel for what's happening with GDP.
Great, thank you. For Wayne, with thousands losing their jobs in New Zealand, is there an oversupply of procurement professionals in the market?
Not so much at the minute. I mean, it remains to be seen. We've only seen sporadic redundancies, actually. I mean, if you're looking at particularly like retail buyers, which isn't obviously traditional procurement, look, I'd say very much so. You know, that's what we're seeing. In terms of procurement, you know, businesses tend to be holding on to the best people. I think they realise this is only temporary. You know, the recovery is happening, and you know, to get rid of anyone in a key position, and most businesses certainly see procurement as that, is just a little short-sighted. So, in the main, businesses are retaining the best people. So yeah, so we're not seeing an overpreponderance of candidates. I'd say it depends on the situation. There's a lot of people who are feeling nervous and who are looking in the market, and for the right reasons will move. But as I alluded to earlier, you know, there's people in positions who were looking who've effectively gone into hibernation from a job-seeking perspective. So yeah, there's some interesting dynamics happening, you know, behind the scenes, and you know, it's certainly having an economic health, you know, impact and health impacts, but it's having a personal and psychological impact on people. So it really depends upon the situation. But in relative terms, the market seems to be pretty balanced. You know, we'll see what happens. I mean, it seems to be quite cyclical with procurement, where businesses, particularly if it's a New Zealand operation rather than a New Zealand business, will periodically, you know, onshore and reshore and offshore the procurement team. So whether we start seeing, you know, teams kind of being, you know, brought back to Singapore or London or Australia, probably more commonly, you know, that might happen, and that will probably have more of an impact. But you know, my probably prediction will be that it will tend to go the other way. I think in a few months from now, you'll start seeing procurement teams really ramp up the capability, and because it's a relatively small market in Auckland more so than Wellington, and Wellington you've got a lot of public sector procurement, You know, you'll see if Fletcher Buildings suddenly build up capability, you only need 10 or 20 roles to hit the market at the same time, and it really starts presenting opportunities and a lot of movement in the market. So, you know, medium term things are looking optimistic. You know, at the minute we're not seeing too many candidates. I wouldn't have said no.
Perfect, thank you. Another question is, what kind of things help a candidate for a procurement or supply chain role stand out from the competition? Your mic is muted, Wayne. Sorry.
Thanks, Adi. So it depends if you talk out in, you know, whether that's CV or your profile or whether that's in person. I mean, I personally find it quite hard to demonstrate how I come across on a piece of paper or a LinkedIn page. So I think it's a lot easier to put demonstrable achievements on there, but certainly the things that people or businesses typically look for, it is the technical capability, and it's your softer skills, so your EQ being a key part of that. It's also your alignment with the business, you know, and that can really depend. It's on a case-by-case basis. So, you know, is the company going through cost out? You know, certain people may fit that model better. Are they looking at building supplier relationships? And you'd hope businesses were always trying to do the two at the same time, of course. You know, and what are the stakeholders like? You know, dealing with a head of engineering is very different probably from dealing with, you know, head of asset management in a bank, for example. So, you know, it does depend upon the situation. So I think the thing is, you know, your technical skills and EQ you can probably get across well enough. The rest of it is probably in person. So it's really having to think about what solutions are you offering to, you know, what you know, the particular business and what they're looking for.
Perfect, thank you. Another question for yourself, Wayne, was what skill sets in procurement do you see as an increasing in value in the current market against those which may be falling out of favour? So I guess it's more of a question of what's currently the big trends you see, which you've covered a bit, and then what are some of the more trends that are leaving the market?
Yeah, I think there's certainly been a trend away from up-and-comers and probably graduates looking to move into procurement. It's the same when you know, a business is going through any kind of pressure, particularly when it's negative pressure. You know, we're seeing evidence of companies looking for people who can hit the ground running and who have got a track record. So I think those looking to break into procurement, and I certainly wouldn't want to discourage anyone from trying. It is going to be tougher now. I think that will come back very well in the future, but for now that's a difficult. So having that demonstrated experience, I wouldn't say the skills going out of trend really, but procurement as commercial decision making is a term we're hearing more and more. So it's not to take away the importance of running a good process, and you know, procurement category managers are, as far as I see it, always going to be in demand. But it's, you know, what else can you offer? It's not just running an RFI, RFP. It's, you know, what can you offer commercially, and particularly collaborating with other functions within a business and not being siloed. So those who can, you know, relate to finance, relate to sales, and be a lot part of that kind of bigger commercial picture rather than just procurement. That's the key trend we're seeing currently, and it has been for a little while, to be fair.
Perfect, thank you. For Jeremy, how is the NZX 50 performance referencing to the global economy? Currently, it's at 11,000 points. Business as usual for New Zealand? Again, another double-barreled question.
No, it's a good question. So, you know, looking at equity markets or equity markets around the world, they have performed, you'd say, counterintuitively. So when the COVID crisis really took off, sort of March, you did see a big sell-off around the world. And that was understandable given the uncertainty and the impact people started to see through social distancing measures on economies. But since about probably late March or so, we've seen a big rebound in equities, and they've recovered much of what they've lost. And this is in part because central banks and governments around the world have thrown a lot to try and fight COVID in terms of the impact on the economy. And also the other main factor has been that economies around the world have started to open up a little bit more. So we've seen in Europe, where previously it was an epicenter of the virus, we've seen countries like Italy and Germany and that start to reopen. Even in the US, which is probably hasn't proven to be the best decision, but some of their states have started to reopen, and now they're starting to see increase in cases. But that reopening of economies has also helped to support equity prices as well. In terms of the NZX, I mean, a lot of the companies listed on there don't necessarily reflect what's happening in New Zealand. They tend to, a lot of the activity is happening, or they've got links overseas, so it's probably more of a flavour of what's happening in the Asia Pacific region. And I think that's really what's been driving it. So it's really following what's been going on in other markets. Now, we've started to see over the last few weeks a resurgence in the cases of COVID in places like the US, now more focused on Central Asia like India and Pakistan, but also South America. And that started to worry markets. So we may see a little bit of a pullback, that's likely to come up in the next week or month or so.
Thank you, Jeremy. Another one is, what would the consequences be for the New Zealand economy if we have a second wave of COVID-19 infections?
Potentially disastrous, really. So, at the moment, as I mentioned in my presentation, we've done really well to get to avoid or eliminate community transmission. So if we were to have another bout of that, then the way the government has responded to COVID so far, it's been very precautionary. It's been quite aggressive in trying to stop it. And if we were to go down to another alert level style, like level 4, level 3, that would really push a lot more businesses, put them under pressure, particularly those that may have just survived the lockdown, started to come out and then having to go back in. So that's clearly going to mean a lot more job failures, a lot more business failures, and a lot more job losses. So that's a concern. I think if it gets to that stage, you're going to have make some very difficult decisions, I think, for the government. You have to start questioning, is it actually worth going down to a lockdown? Because things like recessions, things like large increases in unemployment also have detrimental impact on people's health and also do cause death, unfortunately, as well. So there are some tough questions that may need to be answered, but touch wood, we've done well to date. Let's hopefully we stay that way.
Thank you, Jeremy. Next question for Wayne. With no skilled migrants and not significant redundancies among procurement professionals, what trend can we expect for salaries?
I mean, that's a really interesting question. I mean, as we saw in the global financial crisis, it actually put downward pressure on salaries. And we're not seeing any evidence of that at all. And that's before, skill shortages kind of come into play, really. I mean, the honest answer is, I don't know. My gut instinct would say that salaries will probably stay the same or similar. We may see some modest increases, but I don't think in the short term it's going to have much of an impact. I mean, longer term, it'd be interesting to see, how quickly the borders do open and, who's allowed in. And, I mean, at the end of the day, the skill shortage hasn't gone away. It may have been put on pause slightly because there's not so much of a demand for people, but procurement's one of the areas that we really see will be in massive demand. And we saw during the last global financial crisis that the real onus was on demand planners, purely because most companies didn't have them. And businesses had to come up with creative ideas, like typically putting salespeople in who typically, can relate to people well, and so on. But they were relying on people with, good numeracy skills and training them up. We may see that in procurement in the future, where businesses take more of a proactive approach. I mean, it'd be good to see businesses bringing people into procurement and training them up. But so, in the medium term, I'd imagine there will be some upward pressure, probably on salaries between the 80 to 100k roles. So that traditionally, tend to be called procurement specialist roles. Category managers, I think at the upper end there won't be much change, but at the 120 level, I can see salaries pushing up a little bit there, but probably more medium term rather than short term.
Thank you, Wayne. The next question for you is, given the current situation, do you believe employers will be placing more emphasis and requirement on having the CIPS qualifications or other relevant qualifications for potential candidates in procurement and supply roles?
Yeah, and there's evidence that that's been happening already. It is something, I must admit, our companies will very rarely say you absolutely have to have it, but it is almost always given as a preference, if not a strong preference. So certainly what businesses are looking for are procurement professionals who can come in, make a difference, who are committed to optimisation, to best practice, and really being professionals. You know, I mean, when I started doing procurement, supply chain recruitment, 12 years ago, whatever it was now, procurement from some companies was a collection of people who bought stuff. I mean, it really has risen in profile in New Zealand during that time, and therefore the standards that companies are looking for are going up. And CIPS is a good formal acknowledgement of that. So I would see it becoming more prevalent, yes.
Thank you, Wayne. Last question for you is, what's the landscape looking like in regards to category expertise? For example, are they looking for a professional that has the right hard and soft skills, irrespective of the categories that they gain those in? Or is it more important that they have the experience in the specific category that they're applying for?
Yeah, that's a good question. It's actually quite hard to answer because it does depend. I mean, typically you'd find with something like IT, it's quite unusual for business to be flexible on that. That companies would, as we've seen, would rather bring somebody in with an IT background and train them and educate them in procurement rather than bring somebody in from another category. Now that's not unheard of, but IT is probably the hardest one there. And look, generally, it certainly doesn't make any difference. If you're looking at indirect or corporate categories, whether you've worked with marketing, travel, it's largely irrelevant. We don't find too much there. What is more important is the ability to engage with stakeholders. And that's the same when you're looking at materials and direct categories and ingredients, for example. There is a preference for somebody who's worked in manufacturing. It's not usually actually to do with the technical know-how, though that does play a part. It's more to do with and it can be unfair because it's probably perception rather than reality in a lot of cases, but it's the perception that if somebody works in manufacturing, they're going to know how to engage with a production supervisor or engineering manager better than somebody who's come from, say, the corporate world. So, yeah, look, generally, if you're looking at indirects and directs, not too important. If you're looking at IT or moving from indirects to indirects a little bit more, a good way to do that is internally. There's a lot more examples of people who've moved from within a business to a different category than there is people who have moved from an indirect to a IT category, as a move to a different business.
Perfect. Thank you, Wayne. Now I'll invite the panelists to have any closing remarks. Are there any? Cool. So details of the next webinar is for the 1st of July 2020. I'd like to invite you all to join the Future-Proofing Your Career series, the Applied Learning Pathways, and register via the events page on our website at cips.org. To all of our attendees, we hope you found the webinar insightful and useful. Before you leave today, please could you fill in the post-webinar survey. A copy of the webinar and list of unanswered questions will be emailed to each of you by the end of the week. As again, we as CIPS cannot thank enough our panelists today, Jeremy Couchman and Wayne Frey, for sharing their insights, their expertise and their time. So I'd like to thank them on behalf of the CIPS Auckland Committee. And yeah, I'll take it out with ko te whakiiti, te whare, ko te whakaro nui, which is the bastion point of a good person is shown through humility. So thank you, Jeremy, and thank you, Wayne. Thank you, everyone.
Thank you.
Thank you.